Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time, so if you'd like to watch it again, you can do so there. And if you do go over there, we'd love it if you subscribe to our channel and click on the bell to get notified. Today's handouts can be downloaded from the handouts tab of the GoToWebinar control panel. If you're having any problems locating or downloading them, please just let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the wonderful products that we offer at FX Choice. If you're watching this on YouTube, these handouts will be available in the description box. Please click show more and you should be able to see them. At the end of today's webinar, there'll be a short survey. I know many of you have already filled it in, but if you haven't, please take the time to do so. It'll let us know how we're doing and we can improve your webinar. To introduce our technical analyst today, Trevor has over 40 years experience as a technical analyst and trader and was global head of technical analysis at Bloomberg. So Trevor, over to you.
Yes, indeed. Thanks very much, Dan. And just to repeat what Dan's already said, we love questions. So I can tell you we are going to cover, of course, currencies, cryptocurrencies, precious metals, crude oil, the silver and gold, and the stock indices. And I want to focus today on the currencies, the crude oil, the Bitcoin, and also stock indices. But if there's anything else, or if you want to, just tackle me on any question, just send a message to Dan in the chat box and then he will pass it on. And I love the interaction and I'm here to help you. So the first thing I want to do is start with the relative rotation graph of the currencies, the RRG graph. You can see this for yourself. You go onto relativerotationgraphs.com, it's free over there. But we got really a different picture now. We've got the dollar, of course, in the middle. Anything on the right of the dollar is stronger than the dollar, and then anything above 100 here is with positive momentum. So we've got currently 3 currencies which are outperforming the dollar with positive momentum. Strong currencies getting stronger: Australian dollar, Canadian dollar, and Norwegian crown. We've got an improving picture from the pound and from the euro and Swissy and so forth, but here's a real outlier, which is the Japanese yen going in the opposite direction. So being west of the 100 line here means underperforming the dollar, and heading south as well, so it's a southwesterly direction, means without positive momentum. This is bad and getting worse, is the picture. So I'm going to look today at, yes, of course, the euro and the pound, but also we'll look at one of these commodity currencies here, and also the yen as well. And this is, the best pairing is to take one of these on the long side, and we've got something that is much weaker than the dollar, which is the Japanese yen. So we'll have a look at that chart. So we will start with the euro because it's the big one. Firstly, we'll look at the weekly picture here, and we are still going down in the euro. It's stabilized a little bit. That's all I can say, is it's stabilized a little bit. It's still looking weak. I still see head and shoulders here, shoulder, head, shoulder, neckline, messy breakdown, but still looking weak. The MACD is weak on this. So here we're going down. We've got lower highs in play here. We've had a little bit of a weak rally in the euro, and that does look as though it's already faltering, and the trend, downward trend, looks like it's getting ready to reassert itself. So we've got resistance here at 116.40, and we moved close to it, but look at those small body candles there. It's looking like it's stumbling at this really rather minor resistance. That's a 20-day average, incidentally, there. The RSI has come up above 50 and turned down, which is often as much as you get as far as a rally is concerned in a bear market. So I think this is vulnerable, and of course it will be confirmed at 115.20 level here. So this is something which is weak against the dollar, but maybe better things to look at. So let's look at the pound next. Now this is bounced strongly, the pound. Interest rate hike here, carry trade potential here has bounced the pound quite strongly. So on the weekly chart, we had this double top here, which I thought had broken down, hasn't fulfilled its objective on the downside, and it's bouncing strongly. And most importantly, testing this downtrend line, this lower highs pattern here. This could really be changing direction, and the pound could be taking off. Maybe one of the good trades is going to be the long pound versus short the euro. The MACD on the weekly is still negative. So where's the short-term resistance? Well, there's a fair bit of resistance supported on 138.50 area here, and then quite a lot of resistance above. Of course, we are going down, so there's resistance above. But we are moving up with increasing power. See, the Bollinger Bands are starting to expand here, and so it's getting some momentum behind it. The MACD on the daily is positive, and the RSI is also positive. It does look as though this is going to push up, and so I think the pound is going to come up through that rotation from the top left-hand quadrant into the top right-hand quadrant, possibly by next week. Let's look at the Canadian dollar. Remember that was over on the right-hand side, outperforming the US dollar. This is outperforming the US dollar here. We've got, let's go to the weekly chart firstly. So falling value here is the dollar falling and the Canadian dollar rising. That was up on the right-hand side there, one of the leaders, and pointing in a northeasterly direction. And that is reflecting that action there. So it's come down. It's the MACD has now crossed downwards for the dollar, bullish for the Canadian dollar. So here it is coming down, and it's looking like it's very negative. We've got resistance at 124.18, 126, and right up at 129, 129.38, and also that spike up there, which is at 128.96. But I think it looks ugly. The dollar looks ugly, and the Canadian dollar looks strong, and I can see this continuing to extend this downward move in the dollar towards this support down here at 121, which is not actually very strong. Dollar support at 121 is not that strong. So this does look like a good one. Then the other one over on the top right, you remember, was Norwegian crown, something we've been talking about, and seeing that strength in the crown. And here it is here. So this falling value here is the Norwegian crown rising. And this is a very long-term downtrend here with lower highs in place here, and it looks as though we're moving towards this very, 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 very important 820 level there. The support there is not that strong, so it's moving quite purposefully with the MACD negative here on the weekly chart down towards that 820 level. We've now got quite a lot of resistance above, starting at around 854 level. It's really pretty intense, and so we've got a sort of ceiling in it. The Bollinger Bands are expanding. The weakness is very powerful. The MAC on the moving averages, the 20 is still above the 50, but it's moving towards the 50. So its intermediate term is getting gone neutral message. So I think this is really going to continue its trend of outperforming the US dollar. Now, what was that one right on the other side, going southwest, the Japanese yen? So let's look at the Japanese yen versus the US dollar. So here it is here. So this is the US dollar rising and the yen falling, quite the opposite to what we were just seeing, isn't it? Yeah. So powering ahead here very, very strongly. But this is what's so interesting about it, is the level that it is challenging. Let me just show you where this horizontal level is coming from there. Look at this. How important is this level? The 2017 highs, 2007, 3 highs in 2017, 2 in 2018 being challenged here. This will be big news when this breaks. Then I think you have a clear shot right up to this 2016 high. up here, which is at 118.66, high for the dollar, that is low for the yen. And so I think that this is what we're seeing in the RRG chart is really something quite profound is happening. We are right on it now, that level there. So on the daily chart, how are we looking? Well, we're looking strong. Bollinger Bands are expanding, the RSI is strong, the MACD is strong, the ADX is rising, the trend, the positive trend is strengthening. It's looking good. It looks like it's successfully going to make this break. So, going back to the relative rotation graphs here, there's the yen, there's the Canadian dollar. We were looking at the Norwegian crown there, and here's the US dollar here. So maybe, short the yen is a good thing to do, but if you can think about it, potentially long Canadian dollar, short the Japanese yen, long Norwegian crown, short the Japanese yen, really would leverage this strong outperformance in those currencies, or the Australian dollar, and the weakness of the yen. Not a recommendation, obviously. I'm just pointing out to you, you don't have to do everything versus the dollar itself, and particularly at this stage when we've got a disparate movements. We've got a strong trend in some currencies outperforming the dollar, and strong trend in one currency underperforming the dollar. So it's up to you how you capitalize on that. Okay, moving now to
Trevor,
crypto.
can I stop you? Trevor,
Yes.
sorry, can I stop you for a second? We do actually have a question, and this is the perfect time to jump in for it, I think. The question is from Ray Mills. Thanks for your question. He asks, how much are dollar moves due to oil price? Example, Canadian, CAD and Japanese yen.
Well, if I can broaden it out to commodity prices rather than just oil, it's a lot, isn't it? Because in a very simple form, you can say which countries really benefit from commodity boom, and here are the commodity currencies here, over here, and then which currency, as a gentleman, sorry,
Ray.
As Ray said, Japan is extremely vulnerable to oil because it has to import 100% of its oil, and from a long way away as well, and so it's very vulnerable to that. So yes, you've picked up on it. That's the theme. I would broaden it out to commodities in general, and even the safe haven sort of currencies like the Footsie are not performing as well as the commodity currencies, but oil definitely is helps all these currencies. Pound could do with a bit of a jolt from that. We have some still got some oil left, but there's too many other problems in the UK. But very good point. Any other questions, Dan?
No, that was it for now. No? Thank you, Trevor.
Okay, thanks for that question. I love it. Okay, so let's just spread this out a little bit. So here I'm doing the Bitcoin, the cryptocurrencies RRG. So this is the US dollar here, being right of that, being a reading of over 100, means outperforming, 16% outperformance of the US dollar itself by Bitcoin. Also above 100 with positive momentum, so looking good. And the order is, and we said this last few weeks, we've been saying this, Bitcoin, then Ethereum, and lagging behind is Litecoin. So let's go through those quickly now. So starting with Bitcoin, the strongest of the lot. I'm sure I don't have to refresh your memory about this, but here we are back in the March-April highs of Bitcoin, and we're really testing those levels. And do you know, in my mind, it's already broken, actually, because the spike here, it was very brief indeed. I don't think it presents much resistance, but we have to break through the 64,899, 64,900 level to get the headlines of new all-time high. But it was so briefly traded there, I think we're already on our way. We're at new highs in my book because the resistance is so light. Of course, the technicals are very bullish. The MACD crossed right back here in the second week of August. So here we are breaking up powerfully what's happening in the technicals. The MACD is bullish, the moving averages 20, 50, 50, 200, very bullish order and in the right direction. The ADX is 38 and rising, the trend is strengthening. The RSI is strong, the MACD is strong. It's strong, and I think it's already about to fly, actually. There, the headline will come with the break of the all-time high, but actually the all-time high was made so briefly that I think it isn't really significant resistance. Now, this isn't the same picture in Ethereum. Ethereum is below its high, and it's a bit wobbly, to be honest with you, at its high. So it's finding resistance, and its high wasn't made on a spike like Bitcoin. It's a more substantial resistance point, and we're feeling the pressure of that. The technicals are pretty strong, and behavior is good. I think most likely it's going to follow Bitcoin, but I'm not at all thinking like that in the case of Litecoin. Litecoin is way below. Just go back to the weekly to show you this was a catastrophic sell-off. It was hit hardest when we had that sell-off in May, terrible sell-off in May, and it's really struggling to go up. And as we've been said for many weeks, this is the least attractive of the lot. We're at a resistance level now at 190, and it seems to be struggling. If it breaks the 190 level, I think we could actually have quite a quick move up to 220 level. But the center of focus, the dominance, the market cap, is very much on Bitcoin and a lot to do. I'm sorry to talk fundamentals, but hopefully everybody's fingers crossed being that we're going to get an SEC authorization of a Bitcoin ETF, which would be an enormous boost for the legitimacy of it, and it will allow institutions to participate in it. And I talk a lot to institutions. I can tell you that their uptake has been low. They're all very interested in it. They've been learning about it, trying to get as bright as the kids are and catch up. And it is a catch up for them. They went through the stage of say it's all just for criminals and drug dealers and this kind of thing. And but now they realise it's here to stay, and they're actually looking forward to it. But their mandates don't allow them to just buy Bitcoin. They can't do it. They're not allowed to under the structure of their funds, but they can buy shares. And as soon as an ETF is registered, they can at long last participate in it. And so I expect that the promise, the boost to the legitimacy of it will be real. I think people are just pent up demand is there. They just need the vehicle for it. I had a beer with a friend of mine who's a big hedge fund manager and wealth manager company based in Hong Kong and London and Singapore, and he was saying that many of their clients have bought it, and they bought it for the clients. They've had such trouble with their the depositories that they use about getting them to accept their holdings of Bitcoin. But he said, we've got a lot of buying to do when this ETF comes on board. He said that the wisdom, I hope you're interested in this, but the WisdomTree ETF is just not showing, the promise that it should do. So it just isn't trading enough. It's structured not correctly. Look at this; it's supposed to mimic the behavior of Bitcoin. It's far behind it. It's just not structured correctly. And that's why it's not taking off at all. So that is an ETF that you can trade, but it isn't acceptable to the funds. Okay, so it could be an exciting week if we get that authorization through. And I do believe that it's like a country joining the MSCI Emerging Market Index has a big boost to the index itself, and I would expect it. Okay, moving on then to gold.
Sorry, Trevor, can I interrupt you?
Yes,
we do actually have a question for crypto. So could Trevor please make a Fibonacci projection of Bitcoin? Thank you.
Good point. Yeah, let me do it on the weekly. Yeah, that's a very thank you for asking for that. And so I'm going to take let's just bring in here where should we start? Well, you know, you can argue. There's an arrow here because I've had this argument before that we should start here, or the argument is that we start here. Let us start here. It's going to be a more modest projection, but this one will be a bit more of an upside projection. I'm going to start here on the basis that the sort of rocket move started here. This was the low, yes, 4,000 was the low, but we then spent a long time kind of moving sideways and steady. But the impulse up to the high came from this low here. So let's do that. Choose that one. It is a subjective thing, isn't it? But so this is point A. It's point B. Point C. So that gives us a level of 83,900, 84,000. Frankly, I believe it. I really do. I think this was very powerful. Yes, we had a savage sell-off, but it's corrected it, deflated a lot of excess and froth from it, cleared out a lot of weak holders. Awful lot of people bought in here. So that was a very painful experience. You know, there weren't so many people around who had bought here. They tend to be whales who just hold on forever and ever. So the speculative money was really in here, and so this was a losing experience for many people there. But then now we've seen the buying, the impulse, another one here and there. You could draw this one as well. A, B, C, and on that count, we're at 100% now. The resistance of the high. So that did count up to there. But if we break the high, I think we're on our way to the 100% from the big count there. I think this is a big swinger, this one. We'll see. We'll see. So yes, it is a place where there could be resistance. It's a psychological level. Everybody knows the price, the all-time high. But personally, I think that's really already gone. You know, the selling and buying was really done lower. It was done at 60,000 and below. Yeah, that was just a spurious spike. Yeah, thanks for that. Good question.
Yeah, thank you for your question, Roland.
Yeah, thank you. Okay, I'll move on to the precious metals now, and I'm going to start with the gold-silver ratio. This is gold divided by silver. So rising is gold outperforming silver. So we see it's tailing off a bit here now. For those of you who were around last week, we had a warning about this, didn't we? So we were going up, but we had this bearish divergence, which I drew your attention to here, and that we were running out of steam on this ratio. And so, and also we'd hit significant resistance here. So I suggested that that run might be coming to an end, and that does seem to be the case now. The ratio of gold to silver is now going in favor of silver. So looking at the gold, here's the gold, and gold, it's so frustrating, isn't it? Really, it's really not doing anything at all. This is a weekly chart, and for weeks and weeks and weeks, it's been trading just around this 1,800 or a little bit below it. At the moment, we're doing more of the same. We did have a little surge here, but we hit resistance, and then we came down and lost it all again. But we came back to support. It's supported and it's got resistance. It looks like it's going to continue to churn. The RSI is at 50 or 47. It's neutral. It's a neutral message. But are we getting something from silver? Yes, we are. So silver on its own is actually going up, it's on the weekly chart. Let me show you that. The MACD hasn't crossed yet, so watch out for that. And we have got this lower highs pattern, which is under threat here. So that's that lower highs pattern there, not yet broken. We have to break through that 2360 level to break that. The resistance around 2480 up to 2480 is not that strong, and we've got the expanding Bollinger Bands here after a squeeze, which indicates an increase in volatility in the market, strength in the market. The RSI is strong, the MACD is strong, and this looks like it could, push further up. So unlike gold, which seems to be stuck, and the ratio is being improved by gold staying where it is, and silver looking a lot better, I'd say, than it has been. Now, we've got a lot of action in the energy market. We normally look at the Brent crude oil, but the WTI crude oil has made a 7-year high. We haven't quite done it yet in the Brent crude oil. We're 50 cents away from breaking the 2018 high on it, but it does look as though we're moving towards it, doesn't it? So this is the December Brent crude oil powering ahead here. Bullish Bollinger Bands, moving averages are bullish. ADX is 31 and rising. The strong trend is strengthening. The RSI is making a new high. The MACD is very bullish, and the weekly is, look at that. It is incredibly bullish there. And I'll just show you this is the high that we're challenging here. 2018, July 2018 high. I don't think that does represent much resistance, and we will break it. No, I'm not. I sound a bit too certain. I think that we will break it. I've got the I think part of it. And then before Dan picks me up, says,
well done.
Yeah. But here we've got this famous triangle here, this symmetrical triangle that when we broke down from it, we absolutely went into free fall. Well, we recovered half of that. If we break through this high here, then I think this move up here into above $100 could be relatively swift. It fell swiftly, and we regained the ground swiftly too. And so I think there's, this bull market is close to getting another shot in the arm by that break of that high there, and then releasing a space above with very little resistance there. So this could be, continue to be. We have been excited about it all year, haven't we? But it's about to get more bullishly exciting, I do think. Okay, now moving to the stock indices, we'll start. Let me just, I've got some things to show you actually before I do that. I hope I've got these ready for you. No, here it is. Bear with
Sorry,
me.
Trevor. We'll look. Okay.
No, I'm changing the screen, but not to this screen. That's the wrong thing. I want to show you my notes. It'll be worth it, by the way, when I get there. Don't wander off. I just want to show you a couple of things. FX choice notes, and I want to show you here. So I want to come back to this seasonal question that we've been talking about, and I can't believe how this is playing out to its script, that we talked about here. So I mean, even I'm shocked. So just to remind you, the people that haven't seen this before, but we've been following this description of the behavior of the market. So what we've got, the red line is the S&P so far this year. The black line is the S&P average since 1990 to 2019, all those completed years. But we've got one outline year in it, which is 2009. So the grey line is the same seasonal average, excluding the global financial crisis year. So we'll say that's an exception. And so it doesn't go so deep as the average itself. But you see all of that difference between the grey line and the black line was attributed to 1 year. That's clearly an outlier. So let's be more. But what we did see is that in August we tend to have this weak period, and it did come in at the end of August. We've had the weak period, and then one of the most consistent things is when we pull out of it, and that's towards the end, mid to end of October. That's where we are now. and it seems to be happening. And what comes ahead now is actually the strongest part of the year. See, although this, typically we are bullish in the first 2 quarters, the fourth quarter from the end of September, mid to end of September, is the strongest part of the year, and it looks as though we're headed back up again. I should have shown you this before, but this is the same chart for cryptocurrencies, incidentally. We haven't got the same amount of history, but I've averaged this from 2012 to 2020. This is the average seasonality of it. Once again, here, the strongest period of the year, and you can see how clear this is, and there are no exceptions, like 2000, the global financial crisis or anything like that in this here. We've got a very strong seasonal tendency in the market from essentially now, and here is Bitcoin, and the black line is Bitcoin right now. We're on track, really. We've had this sort of drifting period. We had the drifting period, like we normally do, if you like. And now we go into what should be the strongest part of the year, seasonally. Okay, and so let's go back to the charts now, and we'll go to the US 500. And well, there it is there. And the weekly charts, just to remind you how big that is. But that giant move is, but there we are. There's that seasonal period we've had, which has lasted 1, 2, 3, 4, 5, 6 weeks, let's say, since it topped out, and we turned strongly upwards, basically like clockwork, on time. We've turned up. We've broken this downtrend line in the daily chart here on Friday. This was a very important break, and I think we're on our way up to retest the highs, and there isn't a lot of resistance at the highs, to be honest with you, and so I think that it could be relatively swiftly broken. And imagine the change in sentiment there, and here we go again. We're on our way, and it does look like the S&P is back, if you like. And don't forget, seasonally, we're going into the strongest period of the year, just as we are also in Bitcoin as well. Even my bête noire, the Footsie, which I've hated for such a long time. I've been right to hate it, but actually things are changing now. Let me just show you. Can't hate someone forever, can you? You mustn't do that. It's wrong to do that. And the reason that I hated it was because of this area here. This is going back to the 2017, 2018, 2019 consolidation here. I said I called this like a concrete ceiling for the market. And we stalled here all through the year at just below the concrete ceiling. But I can tell you the technicals have improved a lot here now. And it looks as though it wants to punch into that concrete ceiling. Doesn't mean it can never go through it. I just said it, it's going to be difficult. So this period here, I was sort of warning you that there's a concrete ceiling ahead. It's had an effect. It definitely had an effect for the last 4 or 5 months. It's had an effect. But I think it might be coming to an end. And now we might be able to push ahead. In the short term, the Bollinger Bands have improved a lot. The ADX is at 13 because we're moving sideways. The RSI is positive and the MACD is positive. We're getting a bit of power here, so I think it wants to push into that. It's going to be hard to get through. This isn't blue sky. It's drilling its way into the concrete ceiling, if I can continue to abuse that analogy. So also, I didn't like the DAX, and that also turned out, it broke down from this consolidation and worked its way down, but it's improved a lot too. Here it is on the weekly, and it's it has improved a lot. The weekly is still bearish on the MACD. I'm not quite so excited about the DAX as I am with the Footsie, because the amount of power in the Footsie. But the DAX has got less resistance than the Footsie. So if it does punch in, it doesn't have to go so far to clear it. So this may become more exciting. And then we should look also at the the Tech 100 as well. The Tech 100 has been, we came to the high, this stalled at the high, came down, and it's starting
Trevor,
to...
Trevor, can I stop you a second there? Are we looking at the Tech 100 here?
No, we're not. We're looking at Japan. Thank you very much.
No worries.
Yeah,
So that was a mistake.
Neat of myself. So it came, it didn't make two tops, it made a high, came down. This is a weekly chart here, is also turning up. The MACD is still negative at this point. The RSI come down below 50 and turned up. And so that's a bullish sign. And here we are pushing up on the daily chart here towards the 20-day average. It hasn't got the power, hasn't got the widening, moving at the Bollinger Bands. There is resistance, isn't also tough resistance. 15,600 area is resistance for it. But you know, I look for the best performance out of the things that have the easiest passage, and that's definitely the US 500 itself. Sorry about that mistake there. Okay, so have we got any questions from anybody?
No, that was it. Just the two questions this week, Trevor. Thank you very much.
Okay. All right.
Well,
I thank you all very much there. The seasonal analysis, which I never really bought into, but I mean, I've said it for so many years and been right about that that October phenomenon in the stock market. And I just think, well, why would the stock market always do that in October and then flip in October? But there's no denying it. You know, it's there. I just don't know why. You know, you have crashes always in October. You know, crash of 29, crash of 87, all of them in October. It's like a calendar. Set your reminder for a crash. You'd think that once it happened that people wouldn't do it again, but yeah, it does seem like it happens. No crash this time, just weakness, and then it does look as though it's bottomed out like clockwork and starting to move up into its strongest last quarter. Well, thank you very much indeed, everybody. I hope you find this helpful. Thanks, Dan, for looking after us, and may the trend be with you.
And also with you, of course. And don't forget to join us next week at the same time. Actually, it might not be the same time because we are, the clocks change on Sunday. So depending on where you are in the world, the webinar might be at a different time. Just please remember that we'll be starting at 9 o'clock London time next Monday morning. And also don't forget that we'll be posting this webinar to our YouTube channel in a few hours or so time. So if you came later, you can go and watch it there. And if you do go over there, please don't forget to hit subscribe and click on the bell to get notified. And also there'll be a survey just about to pop up. Please, if you haven't done so already, fill that in. Okay, I think we can finish there, Trevor. Nothing else to add, have we?
No, nothing else to add except to ask you to wish you all good luck. Markets are difficult, but there's a lot of opportunity out there. Thanks very much, and talk to you next week.
Bye-bye.
Thanks, Dan. Bye-bye.